From the outside, BlockDAG looks like the perfect crypto story. A next-gen blockchain, aggressive marketing, massive community growth, constant announcements, and a presale that seems to end soon every few weeks. But if you've been watching closely, really closely, you've probably felt something doesn't add up. The presale keeps getting extended, the deadline keeps moving, and every extension is explained as a strategic decision, overwhelming demand, or community benefit. Today, we're not here to spread fear or hype. We're here to ask one uncomfortable question honestly and with proof. Is BlockDAG's presale genuinely demand-driven, or is it designed to never truly end? Let's start with what a presale is supposed to be. In traditional crypto economics, a presale has a very specific purpose: raise initial capital, distribute early tokens at a discount, fund development, and then transition into public market price discovery. A presale is meant to be finite. Scarcity is the incentive. Time pressure is the mechanism. Early risk is rewarded because it ends. That's the core idea. When a presale keeps extending again and again, it breaks that fundamental psychological and economic contract. Now, defenders of BlockDAG will say this: projects extend presales all the time. It's normal. And yes, extensions do happen, but here's the critical detail most people miss. In legitimate extensions, something concrete changes. Either the tokenomics shift, the allocation changes, or the roadmap hits a milestone that justifies new pricing tiers. With BlockDAG, however, the structure remains largely the same while the deadline keeps shifting. This matters more than most investors realize. Look at the language used around every extension. It's never framed as a delay, it's framed as a reward. Due to massive demand, we're extending the presale so more users can participate. On the surface, that sounds positive, but think deeper. If demand were truly overwhelming at the current price, the logical move would be to close the presale faster, not extend it. Scarcity drives confidence. Extensions dilute urgency, yet BlockDAG does the opposite again and again. Here's where psychology comes in. A moving deadline creates something called artificial urgency. Investors feel like they're constantly on the edge of missing out, but never actually missing out. That's extremely powerful. It keeps wallets open. It prevents the hard moment where the project must face the market. Because once a token lists publicly, control is gone. The price is no longer narrative-driven, it's demand-driven. And that's a much harsher reality. Now, let's talk about something even more important: price anchoring. Every pre-sale extension reinforces a specific price in the investors' minds. When people buy BDAG again and again at pre-sale prices, they mentally lock that value as fair. But because there's no open market yet, that price has never been stress tested. No real buyers, no real sellers, no volatility, just a controlled environment where the project sets the rules. That's not price discovery. That's price conditioning. Another red flag that serious investors notice is the lack of pressure to deliver finality. Strong projects want to ship. They want to prove themselves. They want the scrutiny of the open market because it validates them. A project that remains in pre-sale indefinitely avoids that test. It stays in a narrative bubble where everything can be framed as progress. Listings get teased, partnerships get hinted. But the one thing that would settle the debate, the market, is delayed. At this point, some viewers will say, but BlockDAG has tech, DAG architecture is real, and that's true. Directed acyclic graphs are not a scam concept. They've been researched for years, but here's a critical distinction. Having a real concept doesn't guarantee honest execution. Many legitimate technologies have been used inside questionable fundraising structures. Tech alone does not equal investor protection. Let's examine incentives. As long as the presale continues, the project has predictable inflows. Marketing can be funded directly from new capital. Community excitement can be maintained without facing volatility. But once the token lists, everything changes. Early buyers might sell, price might dip. Sentiment could turn, questions would get louder. So ask yourself, who benefits more from endless extensions, the investor or the issuer? Now let's address the elephant in the room: Is this illegal? Not necessarily. Many things in crypto aren't illegal. They're just ethically gray. The blockchain space is still largely unregulated, which allows projects to operate in ways that traditional finance wouldn't permit. That doesn't automatically mean fraud, but it does mean investors must be far more critical than they think. Another thing rarely discussed is opportunity cost. Every dollar locked in a never-ending presale is a dollar not working elsewhere. You're not earning yield. You're not benefiting from market cycles. You're not even able to exit if your thesis changes. Liquidity is power in crypto. Presales remove that power completely. Let's look at community behavior. Notice how dissent is handled. Critical questions are often drowned out by hype. People asking about timelines are told to be patient. Skepticism is framed as negativity. This isn't unique to BlockDAG, but it's always a warning sign when transparency questions are treated as threats instead of opportunities to clarify. And now we come to the most important part. The part most YouTubers won't say out loud because it's uncomfortable and might upset both sides. A never-ending presale doesn't always mean a scam. Sometimes it means something else entirely, uncertainty. Projects extend presales when they're not ready, when infrastructure isn't finalized, when legal clarity isn't there, when listing conditions aren't favorable. In other words, extensions can be a sign that the project itself doesn't yet know how the story ends. So what should investors do? Blind trust is dangerous. Blind hate is useless. The smart move is conditional belief. Demand specific milestones. Demand finality. Demand a clear, non-movable transition point. If a project truly believes in its value, it won't need endless extensions to survive. Now here's the secret I promised at the beginning, the part most people completely miss. The real danger isn't that BlockDAG might fail, the real danger is that it might succeed just enough to keep extending forever. Not a collapse, not a rug, but a slow, controlled cycle where new buyers fund old promises, and listing is always soon. That's far more profitable than a one-time exit, and far harder to call out. So the final question isn't, is BlockDAG legit or a scam? That's too simple. The real question is this: at what point does patience turn into permission? Because in crypto, timelines are power, and whoever controls the clock controls the narrative. If you're invested, stay informed, not emotional. If you're considering investing, remember this: real value doesn't fear the open market, and deadlines that move endlessly tell a story all by themselves.